As you all know, this meeting is being recorded and will be posted on the town YouTube and the town website. Anna Garvey of the Maryland State Department of Assessments and Taxations has graciously agreed to come onto the Zoom. She is the Supervisor of Assessments for Montgomery County, and she will be answering questions from Somerset residents regarding the tax reassessments that occurred and were released at the beginning of this year. Some questions were sent to her ahead of time by me, and other residents may have questions on throughout this recording. So now I'll happily turn it over to Ms. Garvey to begin.
Good morning, everyone. Thank you for the opportunity to join you today. I also have with me Nathan Kelly, who is the manager that was in charge of the of your area. He is a good resource. You can send him any emails. He can type his email address into the chat. If you have any specific questions, you can of course send him an email. We'd be happy to assist you. I think it would be easier if I go through a PowerPoint presentation that kind of has an overview of the assessment process. That might make it easier. That might actually answer some of the questions that you all have had. So I'm going to share my screen. I was practicing this before, but go back to share. Okay, can everyone see my screen?
Yes.
Yeah. Okay. We started the first slide. Okay, so this is an overview of the real property assessment process. So these the Department of Assessments and Taxation has offices in each county seat and in the city of Baltimore. There's 23 counties plus the city. We have our headquarters staff located in our headquarters in our Baltimore office, and each office, as I mentioned, is located in each county seat. There are 2.3 million properties statewide, and approximately 1/3 of them are reassessed every year. Your properties are located in GO 80, Group 1, which is the group that was just reassessed for this past January 1, 2025. That's the third of the county that was assessed for January 1, 2025, and then the next reassessment for January 1, 2026 will be Group 2, and then Group 3 in 2027. Approaches to valuation, we use a cost approach, an income approach, sales comparison approach. Income approach is usually designated for commercial properties. So for residential properties, we use a combination of a cost and a sales comparison approach. Types of properties. For residential, types of properties would include single family houses, townhouses, condominium regimes. And for commercial, office buildings, retail, warehouses, and apartments are some types of commercial properties. Assessing residential properties. So on your, if you've ever seen your property worksheet, it includes an estimate of construction costs, an estimate of land value. There are different indexes or on there on the worksheet. The most important one is the market value indicator. That's the index, which is also known as the neighborhood adjustment index. It allows us to convert the costs figures into a market value. We then compare our assessments using statistical validation to the sale prices in order to let us know if we're in the right ballpark with assessments, because assessments are an estimate of fair market value based on sales of the same types of properties that have occurred over probably over the 3 years after the last reassessment. Um, so physical attributes. So your property worksheet will tell you the number of stories that our records show that your house has, the size of improvements. Improvements means buildings. It doesn't mean like renovations. It's another word for buildings. The size of improvements, so the size of the house, the size of garages, the size of sheds, that size, those sizes of those improvements will be shown on your property worksheet. The type of construction, whether it's brick or frame or siding, the quality of construction, which is a numerical number, which for most properties in Somerset, the quality, it's going to be quality 5. That's an average type of construction, but there are quality 6, 7, 8 also that exists in the town of Somerset, and that just means that the higher the number, the better the finishes or the quality of the construction is. The worksheet also shows the type of heating, whether or not you have any finished basement, and also shows other residential attributes such as decks, sheds, pools, any kind of feature that's included in your property. All of that will be shown on the worksheet. We use a modeling system, so we model like houses together by the number of stories, the quality of the construction, the style of the construction. The market value indicator that I talked about before, it's also called the neighborhood adjustment index. That's also shown on the worksheet. Our computer assisted mass appraisal program, when we use it to analyze the sales, it indicates what neighborhood adjustment is needed for each model of property, based on the sale prices of those models of property. So we also use statistical measures that are standardized by the International Association of Assessing Officers, which is an international organization, but it is the organization that tells us the standards for appraisal. So we follow their guidelines. Your assessment notice that you received, that was mailed on December 30th, that you may have received by now. It shows you what your old market value was, your new market value, the value of both land and buildings. Again, buildings are called improvements on your assessment notice that you received, but improvements basically mean buildings. It shows your taxable value. It shows the status of your homestead application. If you have applied for it, the deadline for applying for it is May 1st, by the way. It's a one-time application, so if you applied for it when you bought your house, then you don't need to reapply for it, but it does show you on the notice if your property is classified as your principal residence, and whether or not your homestead application was received or approved. It also tells you the appeal deadlines, and it gives you the hearing options, which you can request a hearing by telephone or in person or by video or in writing, and all that is on your assessment notice. Your assessment notice also shows the phase-in assessment, which is because your properties are only assessed once every 3 years, there's a phase-in from the old value to the new value, which is divided by 3. So each year of your assessment cycle, the difference, the value is shown there as a phase-in assessment. And the example shows if your previous assessment was 200,000 and your current assessment is 230,000, the difference of 30,000 is phased in over the 3 years. So the first year would your phase-in value would be 210,000. The second year, the second third of that is added, and that would be 220,000. And the last year, all of the total value is phased in. there. Um, Homestead tax credit. So as I mentioned, the homestead is a one-time application. You can apply online at the onestop.md.gov website, or you can mail in a paper form, but it's best to do it online if you haven't already done so. Homestead credits do not transfer, as when a house is sold and the new owners, they must apply for the homestead credit. They do not get the benefit of the previous owner's homestead credit. In order to get the credit, you must own and reside in the property one full tax year, including July 1. And again, the deadline is May 1st in order to be eligible for any tax credits on July 1. They must receive the application by May 1st. So the 10% cap, you might have heard that language before. It's called a 10% cap because Montgomery County has historically chosen 10% as their cap. As you can see from here, other counties have different caps, but what that means is that for if you do if your property is your principal residence and you have the homestead tax credit application on file, what that means for you is that for tax purposes, your assessment cannot increase more than 10% above what you were assessed on in the previous year. So no matter what your full market value is, or if your full market value goes up 50% or 30%, or whatever percentage the market dictates that your value needs to increase for tax purposes, as long as it is your primary residence and the homestead application is on file for tax purposes, you will never pay more than 10% above what you paid on the previous year. That is the homestead tax cap. And there are income-based tax credits also that the state offers. This homeowner's tax credit, you must own and occupy your property. You can only have, it must be your principal residence. Your net worth cannot exceed $200,000, and your gross household income cannot exceed $60,000. More information about that can be found on our website, and also you can apply for the homeowner's tax credit at the website at onestop.md.gov. And again, that is income based, and that is something that must be reapplied every year. That's unlike the homestead tax credit, which is a one-time application. The homeowner's tax credit, you must reapply every year. Different types of property exemptions. Persons who are legally blind can apply for a blind exemption. It is a $15,000 credit against the taxable value. So like a $15,000 discount basically on the taxable value. There is the disabled veterans exemptions for veterans that are 100% service connected disabled, permanently and totally disabled. There's active duty service members also can apply for an exemption. Active duty service members have to reapply every year. And this 100% disabled veterans exemption, that's a one-time application for veterans that are not on active duty. Okay. Then the surviving spouse of a disabled veteran can continue the exemption once the veteran has passed away by applying as a surviving spouse. And then a surviving spouse of a military casualty. We don't have too many of those, but a surviving spouse of someone who died in service may also apply for an exemption. The property worksheet, I mentioned that before. That's kind of what it looks like on the screen there. It basically tells you all the information about your property. The top part is the administrative part that just tells the ownership information and the size of the buildings and that sort of information. And then going down, then it gets specifics into the building the types of, construction part that's covered there has, the amenities like decks and sheds and that sort of thing, and the different indexes, depreciation, and then the land value, and then the total value is displayed at the bottom. All of that is derived by looking at the sales in the neighborhood, in your neighborhood to come up with your full market value. The law says that we have to assess properties at 100% of market value, so we, we depend on the sales in order to determine what the market value is. Valuation out of cycle. So you received your assessment notice in December, so your property is what's called in cycle. Next year, for the next 2 years, and for 2026 and 27, that's when your property is out of cycle, and another group of properties are in cycle. But we do perform out of cycle valuations. If there's new construction that's valued at least $100,000, then we would send an assessment notice to notify you of any new construction that is done on the property. Zoning changes that are done at the owner's request is also notified. Out of cycle changes in use and character of the property is another out of cycle notification. Any kind of erroneous calculation or measurements, we can send a notice to correct that sort of thing. And properties that are rezoned pursuant to this particular tax article would also qualify for an out of cycle assessment. And if a subdivision occurs, then we will also notify the owner out of cycle. A subdivision is when you you engage a surveyor and you decide to subdivide your property into multiple lots, like if the zoning allows it. Say you had more than the required amount of land for your property, and you wanted to create another legal lot, then you would pay a surveyor to measure the lot and then divide it into 2 lots, and then you can sell one of the lots. Well, if you do that, then we can notify you of your new value as a result of that subdivision. Appealing your assessment. So your notice has on it, as I mentioned before, the deadline for appealing your property and the different ways that you can appeal your property. But there are different types of appeals also. So you could appeal your reassessment. When your property is off cycle in 2026 and 2027, you can do what's called a petition for review. If you feel the market has changed and you want us to review your assessment in 2026 and 2027, you would just need to complete this petition for review form and make sure it gets to our office by the first working day of the new year, which changes each year depending on when the new year falls. So it could be the 2nd of January, or it could be the 3rd or the 4th of January, but whatever the first working day of the new year is, that is the deadline for the petition for review. I usually simplify things by telling people just to get it to us before the new year. That way you definitely know that you've gotten it to us in time, and it can be submitted to us by email or by mail or by fax or anything like that. We just need to have it before the first workday of the new year. And if you are a new owner of a property, you can also file an appeal. You have 60 days from your recorded sales date to file an appeal as a new owner, as long as the sale is reported between January 1 and June 30, then you're allowed the 60 days to file an appeal as a new owner. Sales that occur outside of January 1st to June 30th cannot be appealed as a new owner. The only option would be to petition for review if the property is out of cycle, or to file an appeal on the reassessment notice if it's in cycle. Supervisor's level of appeal, that's the power level, the assessment department's level of appeal. So you can have an in-person appeal with one of our assessors. You can decide to send us a written appeal, which you would basically write out what the reason for your appeal. You could send us pictures If you have condition issues that you want us to see, you can certainly send us pictures. You can have a hearing by telephone, or you can have a hearing by video. All of those options are on your assessment notice. Whichever works best for you, you can choose. So whenever you do file an appeal with our office, we send out to you the property worksheets, the area sales listing that lists all the sales that occurred in your neighborhood. And you can also obtain sales data from our websites. So the supervisor's level of appeal is the most informal. You meet with the assessor. They'll go over your property worksheet. You can tell them the reason why you feel your assessment is too high. They'll write all that information down, and they will discuss it with their supervisor. And then in 4 to 8 weeks after your hearing, then you receive your final notice of assessment, and that will it will give you, like, there's a brief description of whether the value has been reduced or whether the market indicates that the value should not be reduced. Once you get that final notice of assessment, you'll have 30 days to appeal it to the next level of appeal, the Property Tax Assessment Appeals Board level, which is a panel of 3 people that the governor chooses to hear appeals, and they can decide, if you convince them, then they can decide to change your assessment also at that level. So I guess in order to have a successful appeal, focus on the things that affect your property. Tell us why you feel that the market value does not reflect the value of your property. Identify any accurate information on your property worksheet, and send us pictures, as evidence of any condition issues that you may have. Things to avoid when you appeal your assessment: comparing past values. Every time we reassess, we're in a different market, and the assessment from 3 years ago was a whole different market than we have today. So just avoid comparing past values to current values. Avoid comparing neighboring assessments. The tax court has held that comparing assessment is not a successful way to argue your assessment. It's always best to focus on the sales of comparable properties to yours. Also, do not compare your non-arm's length sales, like foreclosures or short sales, that sort of thing. Avoid comparing your property to those types of properties. Avoid focusing on the percent of increase. The increase, the properties can increase any level, just based on what the market demands, what the sales show. So the percent of increase is not a successful measure of to focus on. And the amount of your tax bill, that's we don't, our office is separate from the tax billing office, and we don't control the tax rate and that sort of thing, so we can't really discuss the tax billing and the tax rates. That's not our function. Services rendered or not rendered, whether the streets are plowed or trees are cut or that sort of thing, that's not our area either. So that's not really good things to discuss during your appeal hearing. As I mentioned, a final notice of assessment will be mailed to you after your appeal with your assessor. Usually takes about 4 to 8 weeks. We try to do it sooner, but it could take that much time, just depending on the volume of appeals. And the final notice can be appealed to the Property Tax Assessment Appeals Board, or PTAB, as I mentioned before. within 30 days of the notice date. Well, I believe that's the last slide. So I'm Ava Garvey. This is our address and our office phone number and our general email address. That's a very good thing for you to note because you can send your appeal in or any questions in to that email, and it will be, any questions will be forwarded to the manager, Mr. Kelly, or someone from his team, and someone will, of course, get back to you. Our state supervisor is Adam Lewis, and our director is Dan Phillips, and we'd like to thank them for allowing Nate and I to be here today. So that concludes the presentation. Now, let me just
Yeah, may I ask a quick question? You mentioned the property worksheet. I asked for it on the website where one does the appeal, which offered to send the worksheet. That was weeks ago, and I didn't get that worksheet. So I don't have the information to do the appeal. How long does
you're
it
a bit
take?
low, but I believe you said you requested your worksheet weeks ago and you haven't received it
Yeah,
yet?
that was weeks ago, and I didn't get the worksheet. How long does it take?
Normally it doesn't take weeks. It should only take a matter of days.
Same here. I requested mine 3 weeks ago, the day I received the notice, and have not received anything since then.
I
Me
can
too.
confirm the same situation.
Okay. Okay, well, send us an email. I will definitely check into that and make sure that everyone's worksheets get out to them.
Yeah, for the time being, I put my email into the chat, but I'll put it in again. If you just send me an email, I can go ahead and send you just a virtual copy of it right now, as you're waiting for the actual physical copy in hand.
Thanks a lot.
You're welcome.
Yeah, where is your email?
I'm
Is
going
it
to put it in
Nathan?
one more time. Yep.
Can I ask a quick question?
Sure.
In terms of getting that assessment worksheet, I understand you can send it to Nathan. You can write him an email right now and he'll send us one, but what's the official address where we ask for that? Is there an official form or is it just that email address at the end of your slides?
Their official form. Well, on your assessment notice, you can indicate on there whether or not you would like to receive the worksheet and sales listing. I think it's 2 boxes that you would check on there.
Yeah, you can go in to basically all what you'd have to do to file an appeal. And there's an option to just request the worksheet without filing an appeal on that. If you enter that same information that's on the website, when I called, immediately receiving those were the instructions that were given. And I was told that was the most efficient and the only way to really do that.
So it's on the
So-
back side. It says
If you
procedure?
look at, you basically start an appeal, but before submitting an actual appeal, there's an option to just request the worksheet.
Okay. Also, I wonder if you can.
But again, it didn't work so far.
Okay, well, I'll start with Nathan and go on from there. I wonder if you can re-explain what you were saying about if you have the homestead, property tax credit, that we can't, our taxes cannot go up more than 10% a year. Can you really explain that?
Sure, I'd be happy to. So look at it like you have 2 values on your property. You have your total market value, and then you have your taxable assessment. And I'll get to the part about the actual taxes going up or down. So what we're doing is we're sending that market valuation to the county, then the county is going to generate the tax bill. So they're going to have other rates that they are probably going to increase or lower. So when we send that taxable assessment over, once you have the homestead tax credit, your taxable assessment, no matter what that total market value is, can only be increased by 10%. Now, if for whatever reason market conditions say that your property only went up 5%, it's not going to force you into the 10% increase, It's only there to help you. So at that point, if you only went up 7%, you'd get essentially what would be a new kind of base. So if you go up 30% total market value, your taxable assessment can only go up 10%. Now, that's not to say that you couldn't take out a permit. And I'm going to get into permits. I'm going to side into another question real quick. So it's not to say that you took out the two different types of permits, an under 100K cost estimation and an over 100K. And this touches back to what Ava was saying earlier about permits and out of cycles. If you take out an over 100K cost estimation permit, we're going to look at that immediately. And if it adds $100,000 after we pick up the renovations to your property, we'll send that out of cycle notice. If you take out that permit and it doesn't add over 100K, it gets taken off and it waits until you're reassessed. If you take out an under 100K permit, like next month, if you're like, I want to renovate my bathroom, I'm taking out a permit. You take out that permit, we're not going to look at that until 3 years from now down the road because it won't add any value. So that's another situation where properties will slightly go up and down in value, and it'll look like the percentages are different. But hopefully that answered your question.
Actually, maybe I don't understand my own question, but I think my question was not about if I was taking out a permit, but what I understood, and I admit it went by me fast, about the 10% was that if I have the homestead property credit, then I can't go up more than 10% each year.
Correct.
Am I saying that right?
Yeah, you are saying that right. Now, that doesn't mean your tax bill can't increase because we'll send that 10% increase over to the county and then they'll generate the final tax bill. But your taxable assessment will only increase by 10%
Okay.
each year with that homestead tax credit on that.
So yeah, if you look at
Thank
your assessment notice, it will show you the full market value, but it also shows you your taxable assessment. And if you do the calculation of what your taxable assessment was last year, if the market value increased more than 10%, you're capped at no more than 10% increase for taxable purposes.
Okay.
Does that kind of explain it a little better?
I think so.
So
but-
yes, no matter if your actual market value goes up 50, 60, 80%, that doesn't matter. You will never be taxed on that increase. You're limited to a 10% cap on what you can be taxed on.
Okay. I think I understand now.
Unless you did take out this permit for over $100,000 that you added a second story to your house, or you did some substantial renovations over 100,000, then the 10% cap then goes out of the window, because then you're sent a tax bill based on the value of that renovation.
I understand.
Okay.
Thank you.
You're welcome. Let's see, there's some questions in the chat here. Let's see, I think we answered the first one about the 10% cap. The deadline to appeal. Okay, so you have 45 days from your notice date, and that's stated on the assessment notice. I believe that date on the assessment notice is February 13th. That is the drop dead deadline for appealing the assessment notice that was issued on December 30th. 45 days by law. Let's see. The assessment worksheet. In order to get a copy, owner must have an ongoing appeal. So yes, you can get a copy of your worksheet without having an ongoing appeal. Just shoot us an email to our general email box, and we can send that to you, or fill out the form, your assessment notice, and send that in. You can definitely get your own worksheet without having an appeal pending. Let's see. Of the permitted methods of appealing your assessment, is there one that's more successful? No, I don't think there's one that's more successful than the other. If you choose a written appeal, we would still, look at, do what we would normally do. We look at the assessment, we look at the sales, we look at the worksheet. We follow the same steps. And if we find that based on the sales, there needs to be a reduction, then we would make a reduction, whether you do a written appeal or in-person or video or telephone appeal. So I don't think one method is more successful than another.
May I ask a different question? How often the appeal results in an adjustment of the assessment?
I don't think I heard your question.
How often does the appeal process result in an adjustment to the assessment?
Are you asking how often?
Yes.
Oh, I don't think I have I don't have that kind of statistic readily available. Like, I know we do, I mean, we could find that information if you're asking what percentage of appeals are reduced. That's
Right.
something that we could research afterwards and send to you if you want that information. Like based on last year's appeals, you know, we could certainly find that out. We'll give you that information.
Okay, I'll email you for that information.
Okay.
Okay, I have a question. But first of all, I'd like to thank you, Ava, for all the help you've been over the years. I'm John Medaglia, and thanks, Nathan, as well. Good to see you in person, Ava. So my first question is kind of simple. If you can make that PowerPoint available to Somerset, that would be helpful because there's so much information in it. And my other question, I noticed on my market value assessment that the improvements value more than doubled. And is that kind of the case that the new construction value or cost increased by that much over 3 years? Because that's kind of surprising. Over.
So you're saying the improvement value, the building value doubled from your previous assessment?
Actually more than doubled. Yes,
Doubled.
ma'am.
I mean, it's
Or doubled. Yeah.
it would be based upon the sales. We can, we can certainly send you the sales listing, and you can see the sales that have happened in your neighborhood for yourself, and then you can see, why your assessment is what it is. Because like I said, by law, we have to value properties at 100% of the market value based upon the sales. So if the sales indicated that the assessment needed to be doubled, then we double the assessment. But you have the homestead tax credit to protect you from those kind of market increases beyond your control.
So in other words, it's not simply the cost to physically build a replacement house of the same quality and so forth.
It's not just the cost, it's also a market. There's the neighborhood index, neighborhood adjustment index that I mentioned that converts the cost to an actual market value. So, so basically, if your house costs, like, just keep it simple, $100,000 to build, but houses like yours are selling for $150,000, then we have a neighborhood adjustment that gives a factor that converts that cost, that $100,000 to $150,000, because that's what the market shows your house
Okay.
now.
One quick follow-up question on that. There are very, very few houses that have been sold in Somerset over, per year.
Mm-hmm.
And so the statistical value of these, and there's some that sold at very high values.
Mm-hmm.
And so how do you deal with the fact that, that those are really not statistically relevant if there's that there's not much to compare it to. So, yeah. So.
Well, we have to come up with a market value, and there have been sales in Somerset. There's not a ton of them, but there's at least 10, maybe a little bit more than 10 sales that have happened in Somerset over the last 3 years. And if we didn't have any sales at all in Somerset, then we would look at a comparable neighborhood, close in proximity to Somerset, and extrapolate from there. But there are sales in Somerset that would give us a good indication of what market values are.
I
follow up?
Can I follow up on Jonathan's comment? I have the opposite problem. My house is nearly 100 years old. The construction value, it's irrelevant. The size of the house is irrelevant because I can only sell it for the price of the lot. Is that taken into account in other way? that I can signal the age of the house, because if you compare with a new house that was sold, that new house will be an extra $1 million above my house. I can only sell my house as a tier down.
Gotcha. Okay. So on your worksheet, there'll be a section that's called depreciation. That's going back into that blended approach that we're using, the cost approach and the market approach. So the depreciation of your house starts at the first year, obviously it's built. For the first 10 years of a house's life, it's going to depreciate at 1% a year. After 10 years, it depreciates at 0.5% a year, and it maxes out at 50%. So if you look at that worksheet, hopefully it should be maxed out. If you do have any issues, if what you're telling me, what you would do is you would, in that type of a situation, you would file an appeal and you would mention those things in the appeal, and you would bring pictures in showing, well, I can't renovate, this needs renovated, that needs renovated, I need updating. You would talk about that. And there's other adjustments that we can put onto your property that'll pretty much notate that, yes, this property has some condition issues that need to stay. Now that it's called economic obsolescence, functional obsolescence. So functional obsolescence will stay on your account. If you appealed this year, it'll stay there for 3 years. But when you're reassessed in 3 years, if you haven't done anything to the house, that adjustment's still there, but it's still going to rise and fall with that market index. But that's what I would suggest is a situation like that. I usually suggest for homeowners to go ahead and appeal. And that would be one of the basis for your appeal would be the condition of the house compared to the newer homes.
Yeah,
in your-
how long will it take you to respond to the request for the worksheet? Because the problem is that we don't have the worksheet to see what was done. I just sent you an email. I'm asking
Okay.
whether you can respond before the weekend.
Yeah, I mean, I can, after we get off this meeting, if you would like to, I can shoot you that email.
Thank you so much.
And if not
Thank you,
this
sir.
weekend, for whatever reason, first thing Monday morning for sure, we can get that to you.
Okay.
I don't see your email address anywhere. Where is it?
I'll put it in again. Sorry about that.
Where is it appearing? Could
It'll
someone
appear in the group chat.
in the group chat?
Mhm.
Okay. May I ask 2 questions? Number one, the comparable properties, will they be identified on the worksheet?
Okay, I'll explain that a little bit. So when you file this first, so if you file a first level appeal, the first piece of information you're going to get is an area sales analysis. It's just going to be everything that's sold in your area. It's not really getting into the modeling section yet. It's just everything that's sold. Townhouses, single family, 2-story, 1-story, everything. Now, when you appeal, you'll bring in your market information. If you appeal to the second level, at that second level is when we'll send the specific comparables that we feel best justify our value.
Please explain why that's the way the process works. I don't understand. The comparable properties is the key indicator in a place like Somerset for people who've made no improvements to their house in the last 3 years. I've made no improvements to my house, no permits, no improvements, just suffered depreciation.
We didn't create the process. That's the process that has been the process that's been in place since before our time. I think it's because the law presumes us to be correct, and that if you are challenging your assessment, then the burden of proof is on the taxpayer to provide the comparable sales that they would like us to consider in order to make any adjustment. I think that
The
is
burden is on the taxpayer
it
to
is
present comparable properties?
Correct. Yes, it's
Where is that established?
whereas well, that is the burden of proof is on the taxpayer. That has always been
But that's not the same thing. So if there's 2 stages of appeal and we don't get to see your list of comparable properties until we go to the second stage of appeal, am I going to get those list of comparable properties in advance of that second appeal so that I can order the worksheets for those comparable properties
as
at a
Nate
cost of
mentioned.
$1 each?
That's right. As Nate mentioned, when you do appeal your assessment, we send you your own property worksheet and we send you the area sales listing. From that area sale listing, you'll see all the properties that sold, and you can request at $1 a piece any of those comparable property worksheets. Well, you can request any comparable worksheet. Like if you want to see your neighbor's worksheet, even if they haven't sold, you can pay $1 for their worksheet. But if you want to But if you want to stick to properties that have actually sold, and from the list, the area sale listing that we sent you, you can get the worksheet for any of the sales on that listing.
So typically, how many comparable properties do you rely upon in a neighborhood like ours?
Well, to explain, the first thing that I would do is look in your model number. Hopefully there are sales in your model number. If there aren't any sales in your direct model number, I'm going to look to the similar model numbers. You want to try to have at least 3 good sales
Mhm.
that I could have, but in some market conditions there aren't 3 sales. But usually you want to have as many sales as you can, but your top 3 closest to the data finality of 1/125 would be the best
And
indication of it.
and so how would I make any judgment on the information you're going to supply me before my first appeal on what those comparable properties might be that I could present them to you to meet my burden of proof? I don't get this. This is so non-transparent. I don't need a sales listing of townhouses. They're not comparable. I don't need a sales listing of houses that aren't comparable to mine. I only need a sales listing of the houses that are comparable to mine. How do I find that information?
So you would look at the area sales listing and you would find the houses on there that have similar quality to yours, similar year built, similar story height. And those are the ones that you would, you could rely on to be comparable to your property. If they have the same quality of construction, if they're around the same year built and the same story height, the same type of property, a split level, split for your standard unit, townhouse, whatever property is, select properties from the list that are like your property, and those are the ones that that would most likely have been used to determine your value.
Okay, thank you very much.
Welcome. Where are we here? I think, so if your assessment goes up more than 30% at the end of 3 years, the taxable portion of the assessment still won't be at the market value assessment. I think that is asking about the 10% cap. So I think the answer is yes. So you're saying that if the assessment goes up by more than 30% at the end of 3 years, your assessment still won't be at the market value assessment. I believe, yes, if I understand the question correctly, you will. So your taxable assessment will be less than your market value assessment if because you're limited to the 10% increase each year. And if your assessment goes up more than 30%, then yes, your taxable assessment will be less than your market value assessment. That was the answer to that question. How is the assessed value broken down between land value and improvement value? It is unclear why land value increased by 5%, improvement value increased by 100%. So the law demands that we have that we break out the land and building valuation on the assessment notice. But the thing to focus on is total value. So as long as you determine that, you ask yourself, could I sell my house for this assessment value? If the answer is yes, then the assessment is accurate. If the answer is no, then you would file your appeal and, you know, and show us why you think the assessment is incorrect. But there's no rule of thumb that, you know, the improvements or the increase, the rate of increase for the land and buildings. It's just the overall increase is what's important. Well, not the overall increase, but the overall value is what's important to focus on. Give me one moment here. I have okay. What's the difference in assessment phase and taxable portion of the assessment on the notice? Okay, So the phase-in is the difference, as I mentioned, because assessments are done once every 3 years, the phase-in shows the difference, the third of the value is phased in over 3 years. Now, if you do not own or occupy your property, then the phase-in is the amount that is used for your tax bill. That's why it's called the taxable. That's the phase-in is what's used if you do not own or occupy your property. Now, the taxable assessment can be different from the phase-in. It could be the exact same or it could be different. The taxable assessment can be different if you do have the homestead tax credit and the increase in assessment is greater than 10%, then what's shown as the taxable assessment is going to be, this is going to include the homestead tax credit in it. So the credit is going to be subtracted from your phase-in value to show you what your taxable, what that 10% limit is in your taxable assessment. So it could be the same as the phase-in, or it could be different depending on if you have the homestead. If your value increased over 10% a year, then the taxable assessment could be different from your phase-in assessment, or it could be the same, but the two numbers could be the same. Not sure if that was clear or not, but
It is, thank you.
all right. So you need to have all the support info ready when you request your appeal. So if it's a written appeal, then we would just ask that you get it to us within 2 weeks from filing your appeal, because we probably won't make a decision on it. If you're going to have if you have an appointment, like a in-person visit or telephone or video appeal, then if you don't have everything together, then you could let the assessor know, and they'll probably give you 2 more weeks to submit that information, and we'll just hold on the appeal until we get it. What is the time period for transactions used for the area sales list? How many years of historical sales are included? Finally, is the neighborhood used for the sales list defined as Somerset Township or something broader? So if there are sales in Somerset, then those are the sales that we would rely on to determine the value in Somerset. And that's the sales listing that we would send you are only sales in Somerset. If there were 0 sales in Somerset, then we would send you a sales listing from the area that that is most like Somerset that we would use to determine your value. The period of time for the transactions. So it would be sales in the last 3 years. So sales from 2023, 24. I don't believe, no, 2022 sales would not be included. So it would just be 2023 and 2024 sales are what you're going to see on the area sales listing.
Could I jump in real quick and ask on the type of appeal? My one concern with the in-person is on the flexibility of the scheduling. Do you send an appointment time, or is there some dialogue with the taxpayer to set up the appointment time? I'm just worried because I'm not always super flexible on my own end.
There isn't a dialogue, but if you could always let us know, we would try our best to accommodate. The appeals are generally Monday through Friday between our normal business hours. In the past, if there's a demand, there has been times where we're allowed to have night or weekend appeals. That would be up to our headquarters if there was a demand for that. But if there is an availability that you want us to know, we would try our best to accommodate it during business hours.
Thank you. And also thank you again for making yourselves available today. It's really helpful.
You're very welcome. Let's go back to the chat box here. How many years of historical sales are included? So it's just all the sales that occurred that in Somerset between in 2023 and 2024. That's what would be included in the sales listing. Next one, thank you for your presentation. You're very welcome. I see that, Montgomery County's tax cap is 10%, which is at the top end compared to other counties. Correct. As I understand the counties choose their own maximum increases. That's also correct. What is the fiscal reason Montgomery County would choose the highest possible rate? And is there a process for petitioning Montgomery County to lower the maximum rate? So again, we are a separate agency and department from the Montgomery County Department of Finance, and Montgomery County Treasury. I don't know what the reason is why they have historically chosen 10% as opposed to a lower number. That would be a question for them, the Montgomery County Department of Finance. I could not answer that question. And is there a process for petitioning them? Again, I do not know that answer, but I have the number that for the public to call is 311 or 240-777-0311. You could call them and ask for the Department of Finance and ask to speak to someone there and see if someone there can answer those questions. We do not have those answers. And you get the sales workshop in person. Yes, you can come to our office during business hours, Monday through Friday, from 8 to 4:30, and you can get those in person.
And sorry to ask that related question. So if we want worksheet for comparable properties, how does that work if we have to pay for, a dollar piece? Again, I'm just a bit hesitant because we'd need it soon. And so far there seems to have been some breakdown in the process to ask for it. So what's the most efficient way if I want 10 comparable properties to actually get them?
We accept checks or money orders. We do not accept cash or credit cards. So if you walk in, you could write a personal check, if it's $5, if you want 5 worksheets, we accept checks or money order.
So I can't but just from a practical perspective, that means I lose at least a week, because even if you process it immediately, you have to write you and include a check. And that needs to get to you, be received, processed. So there's no way to speak to just send you an email or a credit card or helping. That seems a very antiquated and also time-consuming process.
Yes, unfortunately, we do not have a way of accepting credit cards, and we can no longer accept cash in our office.
But how can I get all this information between now and February 13th? I mean, I need to find the properties, request them, review them back, and get this information. And then you say, that's just technically impossible.
In general, we're very trustworthy, so we would go ahead and send you the comparables, and we would and then you can send us the check. Most people are very trustworthy, and they do send us the check. So we're not going to hold the comparables hostage. Or your sales comparables hostage. If we will send them to you.
You've been doing it so far. That's a problem. We have asked for weeks and we cannot get the information. Different question. When including comparables, you mentioned that only 2023 and 2024 sales are relevant. Is that right? Or what is more relevant? Is sale that is close to my house, or a more recent sale?
A more recent sale would be more relevant than a sale. For instance, if you had a sale that sold in 23, but there have been 5 other sales of similar homes in your area, the weight will be given to the sales that are closest to the date of finality. So the more recent sales.
Second question is, when I appeal on the website, on that first step, should I include pictures? Or is that for the second step of the appeal?
It's for the first step. It's for essentially for all steps. If you're doing a written appeal, then you would want to go ahead and send in that information with the written appeal. If you're doing a in-person or a video appeal, if you don't have it ready for the time that you're notified of that appeal hearing, you have the right to postpone that hearing to gain yourself more times. I want to say you're entitled to, is it one postponement or is it?
One postponement, yes.
And any postponement after that, you would have to send in a letter to Ava and she would have to approve it. so you have that time if you're scheduling an appeal for an in-person or video to gather those pictures. But if you're in your hearing and one of my assessors and you're talking to them and you happen to say this is my first time, I should have gotten pictures, we're going to grant you 2 weeks to 3 weeks to get those pictures in. Or if you or in that hearing and you just say, you know what, I'm not ready today, I wish to postpone, we'll go ahead and grant that postponement to give you that time.
Really good question. Since assessment goes up every year, why hasn't the homestead credit increased correspondingly? Let me see if I understand that. Since assessments go up every year, why hasn't the homesteader's credit increased correspondingly? Are we talking about the 10% cap here? I'm not sure I understand the question. Assessments do go up every year, but you're only reassessed once every 3 years. So, why hasn't the homesteader's credit increased correspondingly? So, I mean, the assessment is capped, the taxable assessment is capped at 10% each year. That's the cap that Montgomery County has historically chosen, 10%. So not 100% sure I understand the question, but let's see the rest of it. My street has seen 2 new bills in the last couple of years. One sold 2 years ago for over 3.5 million. One is being built on the market. Wow, 3.6 million, and likely at least one more to come. I haven't done any improvements to my house since I bought it 6 years ago. Why should the market value of these new bills affect my assessment? So as I mentioned before, we compare apples to apples. So we would, of course, I mean, the new bills, I mean, they are taken into consideration also, but we would not use new construction to determine the value of your home. There are enough sales of the houses that were built in the 50s in order to compare us to value those houses using those sales. The newer construction, we would use that to value the newer properties. So the answer is we don't use the new construction to value the older homes. We would rely on the sales of the older homes as long as we have them. And if we didn't have them, like I said, we would look at a comparable neighborhood that had houses that were constructed in the 50s and use those as comparable properties. You may have mentioned this, and I missed it. Does the 10% limit for tax purposes each year or over a period? Yeah, each year you're limited to a 10% increase each year. Maintenance and repairs versus improvements. So improvements are the building values, and I did receive this improvement nomenclature has caused a bit of confusion. So we received notification that going forward for the next notices that are sent out, the word improvement is going to be changed to structure. We wouldn't put house or home because not all properties are improved with a house or home. So basically an improvement means it's an improvement to the land, to say that it's not vacant land. So land can be improved with a garage or shed. It doesn't necessarily have to be a house. So I think that's why the word improvement is used as opposed to house. But the word improvement will be changed to structure in the future. So the structure is a house or a shed or a garage or whatever is on that land, then that should make it less confusing than using the word improvements, because it by no means means renovations or improvements to the house. It just means improvements to the land. So it's unimproved land is vacant land, and improved land has some sort of structure on it. So
I have a quick question.
yes.
In terms of comparables, are we talking just comps of houses that were sold? Or more specifically, this question is, if the house next door to me, let's say, has a considerably lower assessment than mine, but yet we are very equal in terms of bathrooms, bedrooms, that sort of thing, is that considered a comparable?
The answer is no. So in my presentation, remember, I said one of the pitfalls to avoid is to compare assessments. And years ago, manager that was here explained it to me when I was new. The reason why you wouldn't want to compare assessments, because if your opinion is that your assessment is incorrect, then who's to say that the assessment that you're comparing it to is correct? So, and because assessments are based on sales, it's always best to use sales to determine whether your assessment is correct or not. So, you know, comparing assessments is never been a successful way. The tax court has rejected the use of an assessment as a way to disprove whether your assessment is correct or not.
So the guys next door to me just might be lucky.
They may be lucky, or they may have a condition issue that they have, you know, told us about over the years. They may have a underground stream that constantly makes their basement wet, and they could have some kind of obsolescence on their property. They may have, you know, some issue that they told us about. It's probably a bit more than them just being lucky, but it's usually, if we're made aware of a condition, then that may be why their assessment could be lower, or, you know, there's usually a reason.
All right, thank you.
You're welcome. Let's see, Somerset is a small and relatively homogeneous neighborhood. Sales are random events, and some streets could go without sales for a long period of time. In such situation, why have improvements been increased at such a dramatically different? So again, we rely on the sales to determine what the new assessment should be. There are sales in Somerset. They have been steadily increasing over time. The sales prices today are more than they were 3 years ago. So we are still in a rising market by all indications. So, you know, we don't just, we look at the sales of like properties and compare them to like properties in order to determine the assessment. I think that answers that question. Again, the assessment can improve, can increase to whatever the sales show that they should increase to. But as long as you have that homestead tax credit, then you're shielded from the market increases outside of your control to no more than 10% above what you were taxed on the year before. I'm still in the chat. Does someone have another question? So, all right, I understand what matters is the total value, but is the split between increases to land and building improvement value based on a methodology or arbitrary? This is not irrelevant since home insurance is based on building value, not land value. So increasing improvement value rather than the land value affects the treasury. I don't believe insurance companies rely on assessments. I've never been contacted by anyone who had an insurance. I'm not even sure if they use our data. The law just says that we have to split out the value. Assessments theory suggests that land value should be, well, this changes over time, but historically 30 or 40% of the value should be the land value, and that's just a theory. It could be different because land in our area is extremely valuable, and so it could be more than that. But a rule of thumb is that it's between 30 and 40% of the total value. But it's that you can't appeal them separately. They can't really be separated for any reason. So that's why I said focusing on the total value and what you can sell your house for is the best thing to focus on. Could you please clarify if you need to send the written info in advance if you're appealing in person? You do not need to send it in advance. You can bring it with you on the day of your appeal. it does take some weeks for us to send out the final assessment notice, and that's because we are reviewing information that we received with the appeal. Why cannot SSAT share the comparables used in the assessment? I think we kind of touched on this before. Used for the assessment for each property seems unreasonable to expect the taxpayer to research. Oh yeah, we talked about this before. I think we already discussed that. Clarifications on the homestead credit. It has remained at less than 700 a year, while my assessment has gone up every year by more than 10%. It seems to me that the credit should go up correspondingly. The homestead credit, 700 a year. Are we talking about the $692 that the county gives as their credit? Because that's a different thing than the homestead tax credit. The homestead tax credit is going to be whatever amount it needs to be to shield you against any increase more than 10% above what you paid on before. But the $692, that's a county credit, and we have no control over that. That's just something that they give to every person who owner occupies their property that lives in Montgomery County. It has gone up over the years, though. I have looked at older tax bills. I think it started, well, I know it used to be lower, and now it's at $692, but I don't know what all goes into that determination because it's not our department's credit. Am I right that you do not need supplementary evidence to file an appeal, at least if you choose an in-person video or phone appeal? You do not need any supplementary evidence to file your appeal. It's just that some people do have something. They usually have like, they'll say there's a crack in my foundation and this is the cost estimate to fix it. And they'll present something like that to us.
I'm just trying to say to initiate the appeal. I think people are confused that they need comps and all this information by the February cutoff date, but I didn't need that. I plan to have it for my actual appeal date, but I just want people to understand, if I'm correct, that you don't need all this information to start the process.
No, and you should not wait. Like if you disagree with the assessment, then get your assessment, your appeal in sooner rather than later. It's important to get it in by the appeal deadline and gather your information, afterwards. So, you don't need to have anything by the time you appeal. This would be good to have it by the time of your hearing, but even at that, if you don't have information at the time of your hearing, like Nate mentioned, the assessor will give you more time to get that information to us. Redfin assessments are well under what the new assessment value is. Do you look at those? No, we do not rely on Redfin or Zillow because we have direct access to the sales, ourselves. We get all the sales from the land records and we have access to all that. And the other thing about Zillow in particular, Zillow compares apples and oranges when they're giving you an estimate, a zestimate, as they call it. If there are townhouses in your neighborhood, then that's included in their average zestimate. So we do not rely on Zillow or Redfin at all. And I think we have got everything from the chat box now. Are there any other questions?
I'm not seeing any other questions.
I don't have any questions. I just want to first of all thank both of you very much for being on with us. But I just want to make two comments. One is this question of land value and improvement value. The fact that so much of the increase is attributed to improvement value suggests that the State Department of Assessments and Taxation believes that what's driving increases in home prices in the state is construction, not the shortage of land, because you hardly give any increase for land values. But so in other words, what's really expensive in Montgomery County is the structure, not the land. I presume there's some methodology, and it's not, you didn't come up with some arbitrary number. So in other words, but that methodology is based on the fact that land is really not, there's no shortage of land in Montgomery County. The second thing I want to say is that, and I know you don't make the rules, but I just want to echo what Mark Perlis said earlier. I think it's a little bit unfair that whereas your department knows exactly which comparators you used for each of our properties, we don't. And I think that that asymmetry between government and taxpayer, I think is inherently unfair. I think that the department should share with us, if we file an appeal, you should tell us exactly which properties were used as comparators. Otherwise, you know, it's an asymmetrical relationship, and we are working from a position of inadequate information compared to the assessment that your department did. And that would inherently mean it would be actually very difficult for us to appeal something, because at the end of the day, as you said, the value was based on comparators, but we will never know what those true comparators are, just simply based on the research each one of us has to do in the neighborhood. So I know this is maybe above your pay grade, I don't know, but I'm just saying these 2 points about land value and asymmetry of information seems a little bit unreasonable on both counts, but I will leave it at that. But I really want to thank you very much for taking the time, and appreciate all the answers that you provided to us. Thank you.
You're welcome.
Yeah.
I do want to touch on that a little bit, because I don't want you to feel that it's unfair. So in my presentation, I mentioned that the first level appeal is the most informal. At the first level appeal, we're not so much as defending our assessment. That happens at the next levels. The first level is more of like a information gathering kind of experience, where you're giving us information and we're reevaluating, our values. The next subsequent levels of appeal, that's when we get into defending our assessments, and that is why the focus isn't at our level to provide you with the exact comparables that were used. Once we get in front of the Property Tax Assessment Appeal Board, that's when the assessor has to defend the assessment, and that is when you are presented with the properties that we feel are most comparable to your property. I think it's because our level is the most informal, and that's probably why it feels that way. And at our level, you're telling us why you disagree with the assessment. We're not so much as defending it, we're just kind of hearing your side of it and reevaluating as we need to. But at the next level, we are then saying, okay, these are definitely the properties that we feel are more comparable to your property, and these are what we used. And then you present your side to the board, the Property Tax Appeals Board, and the board then decides, decides what the value ought to be. And then at the tax court level, that's the most formal level. At that level, you can even have an attorney that represents you. You don't have to, but you could. And all the normal court protocols are followed for that. And then, you get into the nitty gritty and the specifics of your property. It gets more and more specific as the levels progress. So I think that is why it feels like the first level doesn't give you like this, what you're looking for, because it isn't meant to be that type of appeal at the first level. It's meant for you to tell us why you disagree, and we can either make the changes if we agree, or we don't make the changes, and then you go on to the next more formal levels of appeal. I hope that kind of explains that more. And as far as the land value goes, we have a task of providing an assessment, and it's based on the overall value. But we don't get into having super high land values, even though like tear downs or land sales may show that the land value may be higher than we use. But we have to keep in mind that some people choose to buy tear downs to live in, not to tear them down and build big houses. Those tear downs, your neighborhood is comprised of older houses, newer houses. We have to have a land value that fits all of those because the land is the most uniform thing out of everything. Everyone's land value is roughly the same. Everybody's improvement value, if you have a greater quality house or a lower quality house, your improvement value, your house value is going to be what it is based on the quality of your house and what houses sell for. But the land values have to fit all properties, whether they're new or old or whatever. So we'll find that we cannot just choose a land, like if a tear down is selling for $1 million, we can't just put $1 million on every land value because then it wouldn't make sense for the older houses. So we have to have land values that make sense for all the properties because we have to uniformly value land. We can't, it's just, you know, we value land based upon what the zoning allows you to build. The zoning usually allows you to build one house on so much land. And we try to come up with a land value that fits every type of house in your neighborhood. So we can't just place a higher value on land, even if tear downs and land sales show, you know, that the land ought to be much higher because then it wouldn't make sense for the houses that people live in that they do not plan to tear down, they plan to live in for the rest of their lives and do normal wear and tear kind of updates. You just couldn't, because it wouldn't make sense to have like a nominal value on an older house. You still have to have a reasonable building value too. But if you had an outrageous land value, then you couldn't have a reasonable improvement value. I think that's kind of, why the land values are probably not as high as we feel like they should be. I hope I kind of did a good job of kind of why we do what we do. Are there any other questions?
Okay, hearing none, I want to thank you, Ava, and you, Nathan, for agreeing to do this, for taking time out of your busy schedules. I think the residents of Somerset, and I know I personally really appreciate this. So thank you so much, and thank you everybody who came with questions. This was a great experience. So
I'll have everybody that has emailed me requesting their worksheets. I'll have that to you first thing Monday. Via email. I just have to get it together and yeah.
Perfect, great.
Any chance that they could be circulated before the weekend? We are running against a deadline and we have jobs. So we were hoping to
get it to you today. We'll make every effort to get it to you. We'll make every effort to get you your worksheets today. Everyone that emailed me, I'll make sure that we email it to you today.
Appreciate it.
Okay. Thank you all very much.
Thank you. Have a great rest of your Friday and weekend, everybody.
Thank you. You too. Take care, everyone.